Hello and welcome to the look ahead for Tuesday, the 2nd of July with me, Fiona Zingotta, Senior Market Analyst at City Index. So overnight, we'll be watching for inflation data from Japan. In the European session, we've also got inflation data will be due, as well as several ECB speakers, including President Christine Lagarde, as we've got the ECB Central Banking Forum, which kicks off in Portugal. Over in the US session, we'll be watching out for Canadian manufacturing PMI data, as well as a speech from US Federal Reserve Chair Jerome Powell. So just starting off, I think, with the Eurozone inflation, that is expected to tick lower. It's expected to ease to 2.5% annually, down from 2.6%. It comes after German inflation data today, actually cooled by more than expected, cooling to 2.2%, down from 2.4%, lower than expectations of 2.3%. Now, obviously, we've had the ECB. They did cut interest rates at the start of June by 25 basis points. They haven't indicated when they will cut rates again, although we've had several ECB speakers suggest that it's around appropriate what the market is pricing in, which is 3 rate cuts across 2024. So the timing is still a little bit uncertain. So investors will be watching, the market will be watching that data really closely for clues over when the ECB might actually start that or might actually cut again. Obviously, we've also got sort of the fallout from the French elections and also the look ahead to the second round of the French elections, which is on Sunday, the 7th of July. It would appear that the preliminary results from the first round show that the far right are unlikely to be able to form a absolute majority, resulting in a potential hung parliament, which is considered the best outcome for these elections. So let's just have a look at what we've got going on here. This is the euro US dollar. Now we can see we've also let's have a talk about what's going on with the US dollar. US dollar fell at the end of last week after that cooler than expected core PCE data. And the market, which encouraged the market to believe that the Federal Reserve may start cutting interest rates sooner. Now, it's interesting what we've seen going on today, because obviously the euro US dollar spiked out of this falling channel, wasn't managed to really maintain that spike higher, has fallen back below that trend line into that falling channel. If it closes below there, then I think that does sort of give us a fairly bearish signal, in which case then we'll be looking for a break below the 127 level and the 106.70 level, which was the last week's low. Buyers are going to really need to get a break above that 200 SMA, which is around the 107.90 level, and that 108 round number, in order to be building any gains towards the 109.15, which is the June high. Also, as I mentioned, we've got Federal Reserve Jerome Powell speaking. So, that's going to obviously be affecting the dollar side of the equation. Let's just take a quick look at what's going on with that dollar. It's really hovering around that 106 level. We had that spike lower today. Obviously, we've seen that being mirrored in the euro US dollar, but it has been sort of trending higher after we had those expectations that the Fed may not cut interest rates soon. That was obviously after the Governor, Michelle Bowman, said that the Fed might not cut rates at all. Had a little bit of weakening off that high of 106.20 as we got that sort of softer PCE figure in, but not really. It hasn't really caused that much of a sell-off at all in the dollar. So you know what? I think the trend here is still intact. If we get a close above that 106 level, then we could be looking back up to 106.50 on the upside. On the downside, there's support there at 105. Always just worth having a look at USD Japanese yen to see how that's doing. As I said, we've got Japanese inflation data due out overnight. Now, it's not expected to change. It's expected to remain at 2.7%. Interestingly, the yen has come under pressure today after Japanese GDP was revised lower by the Japanese government, quite significantly lower to negative 2.9% contraction, down from 1.8%. And that really does raise questions over the Bank of Japan's ability to be able to hike rates, as they've sort of suggested or hinted towards that they might be doing. And so that's obviously put pressure on the yen, which is, we've got the pair now trading at a fresh 38-year high, above 161.50. And, we're going to see, I think, the next logical level on the upside there. Watch out for 162. Obviously, we are well in intervention territory here. There's been numerous intervention warnings. We've also sort of seen the Japanese authority intervened at lower levels previously. So it'll be quite interesting. I'll be watching out for July the 4th, because they do like to do, if there is any intervention, they like to do it at periods of low liquidity. And we do have that the US bank holiday coming up on the 4th of July. So maybe if they are going to intervene, that's when they'll do it. Obviously, this chart is overbought, but on the downside, if there is any support, it's around that 160 level. Below that, then you've got that 158 level, which is the May high. On the upside, as I said, 162 would be a level that I would be looking out for. Then let's just finally have a look at USD CAD. This is trading pretty range bound right now. We've got that data coming out tomorrow. It's being caught between the 136.65 level on the downside, 137.80, maybe 130, just under 138 on the upside. So, we are just trading within that range, pretty much mid-range. Going to be looking for a breakout. Obviously, the breakout with dollar strength would take us above that 138 level to create a higher high towards 138.50, which is the 2024 high. On the downside, we get some a dovish standing Federal Reserve Chair Jerome Powell, for example, tomorrow. That could give the USD CAD a break below that 136.60 level. And obviously the 200 SMA there at 136 will be a level to watch on the downside. So I hope you liked what you've seen here. And if you have, then please do give this video a like. And if you'd like to receive more videos like this, then please do subscribe.